I'm Lama Shohet, a CPA specializing in the nonprofit sector. Today we're going to talk about some of the top financial challenges facing nonprofits and how to navigate these waters successfully. And don't forget, I have a special free ebook for you, which provides even more insights into managing nonprofit finances effectively. So stay tuned for that. So let's get started. First thing I want to talk about is funding uncertainties. One of the biggest challenges nonprofits face is funding uncertainties. Dependence on donations, grants, and other variable income sources can make financial planning a complex task. So, how can nonprofits deal with this uncertainty? Diversifying funding sources is key. This means not putting all of your eggs in one basket, but exploring various avenues like grants, events, individual donors, and even earned income strategy. Effective fundraising is also crucial. It's not just about asking for money. It's about building relationships, demonstrating impact. Let's dive into some strategies that can help your nonprofit strengthen its fundraising efforts. So, here are some common sources of funding uncertainties. I'm going to start with reliance on donations. Many nonprofits heavily rely on donations from individuals, corporations, and even foundations. These can fluctuate due to economic conditions, changes in donors' priorities, or even competition from other nonprofits. Grant funding. Grants from government bodies or private foundations are often project specific and time bound. So, as mentioned before, too much of a reliance on donation, but also too much of a reliance on grant funding. You need to have your eggs in multiple baskets. So, whether you have individual donations, corporate donations, foundations, but also getting grant funding and things like that. And another thing is economic downturns. Economic recessions or downturns can lead to a decrease in both individual and corporate giving. This can impact nonprofits that rely on these sources. So no one can ever truly guess when an economic downturn or recession is going to happen. So making sure, you're spread around. So if an emergency happens, you have something to fall back on. And another big thing talking about economic downturn is, you know, event-driven funding. Nonprofits that depend on fundraising events may face uncertainty due to unforeseen circumstances like natural disasters or even public health crises like COVID-19 pandemic. Nobody probably would have guessed that we would have had a COVID-19 pandemic, but we did. And a lot of the fundraising and in-person events and things had to be canceled for everybody, not just nonprofits. So it's good, to really have multiple sources and multiple fundings and multiple things really going on. So, here are some strategies to plan and overcome funding uncertainties. One of them is diversifying funding sources. Avoid over reliance on a single funding source. Explore a mix of individual donations, grants, corporate sponsorships, and fundraising events. Consider developing earned income streams, such as selling products or services related to the nonprofit mission. Build a reserve fund. Establish a reserve or contingency fund to help navigate through periods of reduced funding. This fund can be built up over time to surplus. So if your nonprofit's going well, you have great cash flow, it's always great to have a little money to the side because anything can happen, whether it's a pandemic, a natural disaster, a recession. So when emergency comes, that your nonprofit can continue to thrive. And another thing is strong donor relationships. Now, you need to cultivate and maintain strong donor relationships with donors, regular communication, transparency about how funds are used, and demonstrating impact can really encourage continued support. And grant management, you need to develop a robust grant strategy. Stay informed about grant opportunities, understand the requirements, and ensure timely and accurate reporting. And flexible budgeting. You have to really be realistic and understand with your budget that things can change and everything doesn't go exactly to plan. So adopting a flexible budgeting approach can be adjusted in response to funding changes, and make sure you're prioritizing spending on core activities and spending on your program and mission. And be prepared to scale back on non-essential and administrative expenses if needed to make sure your mission is being used and it thrives and you have the maximum impact. And another thing is you can do is invest in fundraising and marketing. I know that's one thing sometimes nonprofits don't think about is marketing, but effective fundraising and marketing strategies can help attract new donors and retain existing ones. Invest in digital fundraising tools and social media to reach a broader audience. Collaborations and partnerships. Forming partnerships with organizations can lead to funding opportunities. Collaborations can also reduce costs through shared resources. Regular financial reviews. Conduct regular financial reviews. You need to really know your numbers in your nonprofit, and you really need to monitor it. So, you need to know if I'm working within my budget, my goal was to bring in this many dollars. I'm ahead of budget. I'm behind budget. Why? What can you do? And not only your budget, but how is your bottom line? Are you bringing in more income and expenses? Are you bringing in more expenses than income? Are you breaking even? You should really know, and you should be able to quickly respond to changes in funding landscape because you really know your numbers and you know what ifs and what can or can't happen with your organization. And scenario planning. Speaking of financial reviews, engage in scenario planning to really prepare for different financial situation. Develop plans for best case scenario, worst case scenario, and most likely funding scenarios. And when I talk about funding and making plans and having goals, it's not just for the dollars. You should also make goals based off your program. So for example, if you want to make sure that 50 students receive notebooks or receive school supplies, how are you monitoring that? Are you just monitoring the funds going in and the funds going out to purchase these things? Or are you monitoring the number of people helped? The impact on the environment. All those things can help and make a difference as well. So navigating funding uncertainties requires a proactive and strategic approach by diversifying funding sources, building strong relationships with donors, and implementing effective financial management practices. Nonprofits can enhance their reliance against financial challenges and continue to effectively serve their missions. So another thing you want to think about is budgeting for mission-driven activities. Now, let's talk about budgeting for mission-driven activities. Your budget is more than just numbers. It's a reflection of your nonprofit's priorities and goals. As mentioned before, you shouldn't just look at the dollars, money going in, going out. You should look at your impact, how many people you're doing, how it positively relates to your neighborhood, your environment. The challenge here is to align your financial planning with your mission. This means ensuring that the majority of your resources are reflected towards activities that further your cause. But how do you create a budget that's both realistic and mission aligned? And once you have a budget, how do you stick to it? Let's explore some practices for budget management in the nonprofit sector. So I'm going to begin with understanding what is even mission-driven budgeting. It is having mission alignment and strategic planning. So by mission alignment, I mean the budget should reflect the organization's mission and priorities. Every line item in the budget should contribute directly or indirectly to achieving the budget mission and achieving the organization's mission. And with strategic planning, I mean budgeting should be integrated in the organization's strategic plan. This ensures that financial resources are allocated to strategic priorities and long-term goals. So here are some key steps in budgeting for mission-driven activities. First, you need to define objectives. Clearly define what the organization aims to achieve in the upcoming budget period. These objectives should be specific, measurable, and they must align with the mission. Another thing you can think about is really revenue forecasting and expense planning. So what I mean by that is you should really estimate the revenues realistically. Consider various sources like donations, grants, fundraising events, and any earned income. Be conservative in estimates to avoid over-reliance on uncertain income. So what that means is you don't want 95% of all your income coming from donation, grants, fundraising. You really should have a good mix. So if anything was to change, you can continue to thrive. And with that, the revenue fund forecasting is also keeping track of your expenses and expense planning, categorizing expenses into program expenses, which those is what directly serves the mission in your organization. Administrative expenses. So those things is the cost to operate your nonprofit that aren't necessarily directly a part of the program, and fundraising expenses. So that's expenses of having fundraising events and being able to raise funds. So you need to prioritize funding for core programs and essential operations. Now, another thing you can do is involve stakeholders. Engage in different departments and stakeholders in the budgeting process and ensure a comprehensive understanding of needs and priorities across the organization, but not just internally the people working in the organization. You should include your community. You should include the board and really have transparency. So speaking of that, here are some best practice and mission-driven budgeting. First up is transparency. Maintain transparency in how funds are allocated and used. This builds trust with donors, board members, and other stakeholders. Cost efficiency. Strive for cost efficiency without compromising the quality of programming and the work and help you're doing within your community. This may involve negotiating better rates with vendors, leveraging volunteer resources, or even finding cost-effective ways to deliver services. And as mentioned before, have reserve funds. Establish a reserve fund to manage cash flow fluctuations and unexpected expenses. If you have unexpected expenses, lose a course of funding. You want your nonprofit to still be able to thrive and have the impact that you're really working for within your mission. This provides financial stability and ensures continuity. And now you need to, measure your outcomes as well. You need to link budgeted items to outcomes and impact. And outcomes and impact isn't just funding. This is how many people you're helping. How is it helping the community? This helps in evaluating the effectiveness of spending and justifying budget decisions to the stakeholders, to board members, and even to the public. And you need to use budgeting software. There's a lot of technology out here to really help you know your numbers and to stay efficient in that. So using budgeting software and tools to streamline the process, improve accuracy, and facilitating reporting and analysis in real time. And last but not least is staff training. Ensure that staff involved in budgeting and financial management are adequately trained and understand the importance of aligning the budget with the mission. Does the staff know the mission? Does the staff know the goals? Does the staff understand the plans of the organization and where you're going? And that's very, very important. So budgeting for mission-driven activities is not just about balancing revenues and expenses. It's about ensuring that every dollar spent advances the nonprofit's mission. It requires careful planning, stakeholder involvement, and ongoing monitoring by adhering to best practices in mission-driven budgeting. Nonprofits can maximize their impact and ensure long-term stability. So another thing is regulatory compliance. Another significant challenge for nonprofits is regulatory compliance. This includes everything from tax reporting to adhere to rules of grant funding. Non-compliance can not only lead to legal issues, but can also damage your organization's credibility. You can lose grant funding, you can lose donors. So how can nonprofits ensure they stay on the right side of regulations? It starts with understanding the legal requirements specific to your organization, your mission, and your sector. So let's discuss some of these things. So here are some key areas of regulatory compliance. I'm going to start with tax compliance. So, do you have your appropriate status? Do you have your 501c3 status? If so, you need to maintain compliance with IRS regulations to retain that status. This includes restriction on political activities and a requirement to use funds for exempt purposes, so for that mission. And another filing requirement is making sure you regularly file your 990 tax return, whether it's the 990N postcard, the 990EZ, or the full 990, with the IRS providing detailed information about the organization's finances, activities, and governance. So another thing you can do, another key area of regulatory compliance is state regulations. Every state has different regulations. You need to make sure you're complying with the state laws regarding charitable solicitations. Most states require you to be registered as a 501c3 and registered with that state before you can solicit any donations. And even a lot of grants and fundings, they require for you to be set up correctly with the federal government and with the state in order to apply for these grants and to solicit donations. So reporting requirements, and make sure you meet state-specific reporting requirements, whether it's the type of tax return you have to file. That may even include submitting annual reports and disclosures, having to get an annual audit. These are things you need to keep, abreast and ahead of. And another thing, another very important regulatory compliance is employment laws. Adhere to federal and state employment laws regarding wage and hour laws, anti-discrimination policies, and workplace safety regulations. And you should also have governance and ethical standards. Implement governance policies that align with best practices and legal requirements, including conflict of interest policies and whistleblower protections. You should make sure you have these things on file and they're appropriate. So make sure you're hiring or using the right resources and the right consultants or contractors to get these things in order to make sure you're set up appropriately. And last but not least is grant compliance. Ensure your compliance with the terms of the grant and conditions of the grant agreements, including using any funds, reporting, and auditing requirements. Audits, may not be required at the state level, but they may be required based off of specific grants. So really understanding the rules of that grants. So here's some strategies to really help you navigate within this regulatory compliance. First off is stay informed. Regularly update your knowledge about relevant laws and regulation. This can include subscribing to legal updates, attending workshops, and consulting with legal experts. You could also read my free ebook or, opt into my weekly newsletter. Internal policies and procedures. Develop and regularly update internal policies and procedures to ensure compliance. This includes financial controls, governance policies, and ethical guidelines. And again, make sure you're having training and education. Provide ongoing training and education for staff and board members on compliant issues relevant to their roles. And whether an audit is required or not, conducting an internal or external audits can assess the compliance with various regulations, and you can use the findings to address any areas of concern. And document and record keeping. Maintain thorough and organized records, including financial documents, board meetings, and policy acknowledgements. And you have to make sure that you're keeping up, with legal. And you need to have legal and professional assistance. So seek assistance from legal professionals, CPAs, and other client compliance experts, especially for complex issues or significant changes in regulation. So navigating regulatory and compliance is an ongoing process that requires diligence, knowledge, and proactive management. By prioritizing compliance, nonprofits not only avoid legal pitfalls, but also strengthen their operational integrity and public trust. It's essential for nonprofits to include compliance not as a burden, but as an integral part of their mission and organizational health. So in conclusion, as we conclude, I hope this video has given you clear understanding of the financial challenges nonprofits face and how to address them. Remember, effective financial management is key to the success of any nonprofit. And now, about that free ebook I mentioned earlier. It's titled 7 Financial Mistakes Nonprofits Make That Jeopardize Their Tax-Exempt Status and Funding. This ebook is a valuable resource for anyone involved in nonprofit management, someone who works at nonprofit or just interested in nonprofits in general. Click the link in the description to download your free copy. Thank you for joining me. And if you found this video helpful, please like, share, and subscribe. Your support helps spread valuable knowledge to others. And if you need personalized advice or assistance, don't hesitate to reach out. I'm LaMichelle Hecht, and I'm here to help you navigate the complex world of nonprofit finances. Until next time, take care.